a minute from the start of European cash trading this Monday morning. Let's have a look at how the markets are set up for the trading day as we head towards the start of it. So less than a minute to go. Euro dollar a little on the back foot, down 0.2% or so, or 1/8%. ECB in October will be on its last lap in quantitative easing. That's the headline of one of our ECB related stories, which I found interesting. We'll pick up on that later in the week. In the oil markets, of course, the focus really on what's going on with Iran. That's going to remain topical. Matt, you talk quite a lot about the weakness that we see in the Chinese markets today. Trade tensions, further threats from the Trump White House to put further tariffs on Chinese imports. Very much part of the story. With all of that,
hello again, everybody. Sandy here, looking at the markets. Just getting ready for this London market open. Talking about looking at currency trades, and of course looking at the Forex world in general. Just looking across the board, nothing really happening, of course, on the London market open. Oh, we got the European market open here in about a couple of seconds, but everything looks like it's still kind of contained, really quiet in the market, I guess you would say. Pretty much the only movers that you have out there is the Canadian dollar. At this moment, the dollar index is relatively flat, so just a little quiet here. Had a little bit of a move a couple minutes ago in the euro, but looks like the market is already starting to give back that move. So once again, just kind of hanging tight here to see if this market will actually open up for us. We still got an hour before the London session opens, and at this point I'm watching to see if we can actually hold some levels in the euro. We're right around 115 and change, so that'd be fascinating to see if this market could actually run into a little bit of support. You got the Canadian dollar, which actually looks like it's setting up pretty decent strength here right now. You got a clean breakout over the course of the past couple of days, and now we're actually following through. So the Canadian dollar may be actually the one that we're focusing on. Australian dollar continues to trade on its lows. Same thing with the the New Zealand dollar. Watching the dollar overall, of course, as you know. Feel free to ask any questions if you have any. Just go take a look at the dashboard. This right here is the dashboard that we're watching. Once again, the idea here is to focus primarily on the dollar index futures or the dollar index, and you could see that the basis here is to trade the major currencies. What we like to do is focus primarily on the big economies here, because those are the ones that we can actually find the most data on and rely on the most in order to get information, transparency for that matter. So the basis here is that what you're looking at right now is the dollar grid that I show, where the top left hand corner is the dollar index futures, and on average, or typically most of the time, this is what I look for, is that the dollar is the focus. Whatever the dollar is doing, I can find the correlation between the Swiss franc, the Canadian dollar, and the Japanese yen, which are across the top. USD CHF is the Swiss franc, the USD CAD is the Canadian dollar, USD JPY is the Japanese yen. Those three have a tendency to go in the same direction as the dollar. Whereas on the opposite end, you have the Euro USD, EUR USD, which is the euro, the GBP USD, which is the pound, and the AUD USD, which is the Australian dollar. The NZD USD is the New Zealand dollar, and these four currency pairs have a tendency to go in the opposite direction of the dollar index. So the dollar is the focus here, and it's just a matter of how we trade the dollar as what we always pay attention to. So back to the grid here, you can see that the dollar at the very top left hand corner is basically in an upward bias, an upward trend here. This is a weekly chart of all of these pairs here. So you have the weekly chart, and what I want to emphasize at this point is that we're starting a new week, of course. So what we should be looking at is the the current bar in relation to the previous bar. This bar right here is actually this week's opening, or this week's current trading range, current price action compared to last week. And when we look at that, what we can already see here is that the current price here is inside or trading within the range of the last week. So nothing is happening right here in the euro dollar, but you can see the same thing is going across the board here. Same thing in the pound dollar. Notice here that you are on the verge of breaking below last week's low in the Australian dollar, which is actually kind of important. We want to pay attention to that because what we can anticipate here is a continuation of the slide here. So I'll be looking for this market to actually go a little bit lower. Same thing here with the New Zealand dollar. Notice how the New Zealand dollar actually is trading below yesterday's low, or last week's low. You can see how we are actually trading below last week's low. So this is already showing how the New Zealand dollar and the Australian dollar are practically the weakest here of the majors. Okay, so the Australian dollar and the New Zealand dollar appear to be the ones to be focusing on. The reason why we'll focus on them is because we want to be we want to keep sight of the pairs or the trades or the markets that are the weakest, and then also the ones that are the strongest. Those are typically the markets that we want to pay attention to. We don't really want to be caught trading currencies where the current price action is trading inside of the previous week's trading range. You can see here that the pound dollar, for instance, if I zoom in, really get close into price action, you can see that this week's low and this week's high are trading within last week's low and last week's high. So very consolidating type of move here. Nothing really going on there. That's the easiest way to determine that there's nothing happening. Again, with the same thing here in the euro. Really nothing going on in the euro. We did come down to last week's low and we're using it as support. So that'll be interesting to see if we're able to break down below last week's low. At this point, you can see that over the past, I would say the last 20 minutes or so, the market did come down and test last week's low. So what I'll be looking for is to see if the euro can actually hold last week's low. Right now it's using it as support, and that'll be very interesting to see if it actually sets up for a trade to the upside. So I'm on alert here. Once again, it's Andy here signing on, and the idea is to be very aware of the fact that we're just getting this week started, so things may evolve quietly. We'll be watching the board. Like I said, everything is really not doing anything at this point. We're just kind of getting the market open for the week, and of course the London session is due in an hour. Right now we have the European session, and as it stands, like I said, the euro has tested the previous week's low right now over the past 20 minutes, and now I'll be watching to see if we continue to hold that, if we flatten out right here at last week's low, and if we're able to actually build upon that and then set up for a buy opportunity in the euro, see if we can get going to the upside. If that sets up, then that'll be a pretty important catalyst for the rest of the week, giving us something that we can trade to the long side, maybe even holding on to that. Aside from that, you could take a look at the Canadian dollar. This right here up the top right, the second from the right is the Canadian dollar, and you can see how we are trying to break out above last week's high. Now, over the past couple of weeks, we've had a nice test of the 40 period moving average here, so this is providing support, and on top of that, we broke an important trend line here that we should all be paying attention to. So once again, Canadian dollar already showing us here that it's ready to burst back to the upside. My short-term target is up here at 133.85, assuming that we can stay above 130. So I like the idea of more upside here in the Canadian dollar. At this point, just be on alert that we are still getting the week started, so it might be rather slow for the time being. My emphasis at this point is to keep an eye on the dollar to see, the euro dollar, to see if it can stay above 115.24. So if it can stay above 115.24, then that's going to give me a little bit of confidence to go along with that or to buy it. The other thing is the Australian dollar. Looking at the Aussie, you notice how it's also trading at last week's low too. Okay, so if the Australian dollar can actually hold its low as well, then I'll be looking for upside here. And then the New Zealand dollar is kind of the one thing to watch here too as well. As long as it can stay above last week's low. See, right now you had a gap down, and then we actually rallied into last week's closing price, and then the market actually traded off of that. It is going back down. So I'm looking for watching these three pairs, because these three pairs are going to give me a little bit of insight into what we can expect in the dollar. Dollar currently is trading at an important level, at least from a short-term perspective. If you were to go to let's take a look at some intraday price action here. Okay, so the dollar index futures, if I go and take a look, say at the 240, this right here is the 4-hour chart. Now, what you can pay attention to is this high going back to, it looks like 15th of August. Okay, so when you take this high and connect a trend line to it, this is where we are right now. Now, this is what I'm really paying attention to, this level right now, because this is setting up for me in terms of a triangle pattern. And the idea is that if this market can hold below this trend line here, if we can continue to trade back to the downside, then that is going to be the confirmation that I'm looking for in the euro. So we need to be alert here in terms of whether or not this market can hold that this trend line here. I want to see a pullback. I want to see this market trade back off of this. I want to see it go back down. And if that happens, then it'll give me the confidence I need in order to get to buy the euro. But right now, if we have a breakout, if this market goes above this trend line, then that'll switch the game for us. That'll have us actually thinking about taking the euro south, actually taking a short position on the euro. Okay, so again, just getting started for the week, watching these pairs open up. Let's see if the London session brings us anything here in 45 minutes. Right now, we're just getting through the European Open the European Open. If you have any questions, don't hesitate to reach out. You can throw some questions in the chat box, and then I'll try to get to them as soon as possible. Also, trying to update some stuff on the website. Trying to kind of post my thoughts at the moment. Kind of keep a running catalog, a running log in terms of what I'm expecting to happen, or what I'm doing for that matter, so that way it's easy for folks to actually just check in and take a look at it on their time.
and the cost has been monstrous.
So that was the group leader of the Sweden Democrats in the Swedish Parliament. That was Mattias Karlsson speaking there. Of course, the problem for the Sweden Democrats is that nobody in the Swedish Parliament actually wants to speak to them. All of the other parties have distanced themselves from the Sweden Democrats. The question is, though, if that can continue going forward, if indeed they want a government. Matt, Anna.
Good morning to you, Marcus. We saw that a little bit, didn't we, in other parts of Europe, certainly Germany, distancing themselves from other parts of the spectrum. What about the impact on markets? I see that the OMX is down a little. But
looks like that euro is definitely
I guess it's dictated by the fate of these
getting the kind of response that you want. Let's see if I can.
Yeah, absolutely. I think
right now we're at 1540. It looks like 1544. Right now we're at 1540. It looks like 1544. Right now,
as they currently stand, aren't as bad as they could have been. The forecast, or some opinion polls at least, were forecasting bigger support for the Sweden Democrats. With their 62 seats, they're likely to become kingmakers, as I see in the Swedish Parliament, but perhaps not with the same kind of influence that some folks at least had feared ahead of this. So something certainly to keep an eye on going forward. I suppose, or what the analysts are saying, what the strategists are saying, that the best outlook for the Swedish krona would be for the centre-right coalition to gain power, both sort of more immediately and also in the longer term. But we'll see if that indeed happens, because there are so many question marks at the moment. It just needs to be highlighted. Anna, Matt.
All right, Marcus, thanks very much. Bloomberg's Marcus Carlson there in Stockholm on the ground covering the results of that election.
So once again, the focus here is to take a look at the major pairs. Now, even though we're looking at right now, you can see that we're only looking at 8 different markets. I know that for those that are new or those that are struggling, I mean, this can actually be overwhelming. So you really only want to focus on 1 or 2 of these. Most of the times what I encourage is that if you're brand new or if you're having trouble understanding what's going on, I would probably focus primarily on the 2 charts that are on the far left. You have the dollar index at the very top, and then you have the euro at the bottom. And what you'll find is that the dollar has a tendency to do one thing and the euro has a tendency to do the opposite. So that's a good confirming factor for you whenever you're looking at the chart. So if you think you're confused when you're actually analyzing the chart, let's say the euro, because that's the actual tradable instrument that you're using. If you're trading the euro, then you can pretty much go and take a look at the dollar and see if it's doing the opposite. And if it is, then it has a tendency to confirm what you're looking at. Or sometimes you may be confused at what the euro is doing. And you can go take a look at the dollar, and it will give a little bit of clarity, for you. So just a little bit of a little insight there, that if you want to understand the markets a little quicker, then you typically want to focus on one market and then learn the nuances of the chart, and then that'll allow you to expand your view and go trade other markets. I emphasize the idea that we trade classic trading principles, in that we use primarily a lot of the understanding for technical analysis. So all the technical analysis principles that have been around for over 100 years, that's really what we're focusing on here. But a lot of waiting. There's a lot of patience involved in this, because right now, even though the market may not be very active, you can see that we're just getting started, but it could set up a little bit later, who knows. But the idea is that you kind of got to sit there and just be patient and let the market come to you. Of course, we got the dollar on the highs. So with that in mind, that's pushing the euro on the lows, but the euro is bouncing at this point. So I'm thinking that I think the euro is going to find support here at last week's low. I think it was 15.25 was the low for last week. Like 15.27 is the low so far that I have right now. So as long as we can stay above 15.27, then I'll start to actually look for some setups here. Okay, I got to get above. Got to stay above 15.27. Looks like we're gonna start running into resistance right around 15.50. But if we can get back above 15.60, that's going to set up for a move. We got 15.80 and then 16.25 are some targets as long as we can stay above that. Okay. Canadian dollar, of course, looking the strongest. So I need to be aware of any kind of a pullback into, looks like 131 even is going to be a nice buying opportunity. But at the point right now, I'm just watching the euro to see if it can stay above 15.20. That's going to be my focus. That, and if the pound can stay above 129. Need the pound to stay above 129. Need the Australian dollar to actually stay above 71. Need the New Zealand dollar to stay above 65. Okay, but if that happens, then that's going to be not good for the Canadian. That'll actually push the Canadian dollar down.
Welcome back to Bloomberg Markets. This is the European Open. I'm Matt Miller here in Berlin alongside Anna Edwards at our London headquarters. There you can see the world map in the floor under her feet. And there's really not a lot going on in European markets. You see the Spanish market up almost 1/10 of 1%. The French index down almost 1/10 of 1%. The only real action, I guess, is in Italy, which is gaining 0.6 of 1% as investors are optimistic about the prospects of this coalition government.
They're showing me a map. They're showing me a map on Bloomberg right now, and basically confirming what I'm saying. That really there is not much going on, but what I'm looking at is potential upside here in the euro. I'm liking what I see. This is actually showing real strength off of the low. So
the chief negotiator of UK is really active.
15.27 is the low. 15.27 is the low in the euro. Just need to stay above 15.27. Looks like the Australian dollar is helping.
Luke Hickmore, Senior Investment Manager at Aberdeen Standard Investments. Let's talk about the pound. Luke, you're listening to the news flow out of Berlin for clues on the pound, and you closed your short, I think, recently. So tell us where you think it heads next. I've got a chart here that shows pound volatility. That might advance, but you think, what, the worst's over?
For now, maybe. The volatility's been rising, so it's very hard to call it definitively, but that's kind of one of the reasons to be out of the trade as well. When you're less certain about the outcomes, you're better to step aside and just let it get on with it. But I think, the pound's been driven by politics. We're going to have the Conservative, and we're going to have Labour, we're going to have the main parties all getting through their kind of autumn conferences very, very soon as well. That's possibly a point to reload a short. The rhetoric I think that we're going to be getting at the Conservative Party conference is going to be pretty tough on Theresa May and their negotiating.
So if you're
possibly won't be quiet. Yeah, Matt.
let's see, I'm trying to decide if I want to kind of go over some of the pairs that we trade, because they're basically derivatives of the majors that we trade. Even though it looks like we are trading
Is this going to be the kind of thing that just gets dragged on in typical European Union style? And
even though it looks like we're trading 8 pairs here, you have to understand that if you cross them, or if you cross if you actually take a look at the multiple combinations that you can have, you can trade up to 27 different pairs. Okay, so what you'll notice here is that you have the 4 across the top, which is the dollar, the Swiss franc, the Canadian dollar, and the Japanese yen. That's the top 4, and then the bottom you have the euro, the pound, the Aussie, and the New Zealand. Now, when you go actually take a look at the combinations of these pairs, you'll find that you can have a combination of 27 different pairs. So these right here are all the various tickers that I have. Okay, so you have the CAD, the dollar, the Swiss franc, the Aussie, New Zealand. This is what happens when you actually compare the Australian dollar and the New Zealand dollar. Or really what you're looking at are the exchange rates. So this is the exchange rate if you were to take the Australian dollar and the New Zealand dollar, and then underneath that you have the Australian dollar and the Canadian dollar, the exchange rate. What would be the exchange rate for exchanging your Australian dollars for Canadian dollars? Then you have the Euro, Pound, EUR, GBP, AUD, CHF, which is the Australian dollar, and the Swiss franc. Okay, and then it goes on. CAD, Swiss, CAD, CHF, Pound, CAD, that's GBP, CAD, Pound, Aussie, that's GBP, AUD, Euro, CAD, EUR, CAD, Euro, New Zealand, EUR, NZD, Euro, Australian dollar, EUR, AUD, Pound, Swiss, that's GBP, CHF, Euro, Swiss, EUR, CHF. The next one is the New Zealand yen. Okay, so that's NZD, JPY. We have the Pound, New Zealand, GBP, NZD, and then NZD Canadian, that's New Zealand Canadian, NZD CAD, New Zealand Swiss franc, NZD CHF, and then you have the euro, that's EUR USD. Up here, sorry, that's USD CAD for the Canadian dollar. For the Swiss franc, it's USD CHF. Okay, of course we have the dollar, that's DXY. And then again here, the back to the bottom here, EUR JPY is the Euro Yen. You have the Japanese Yen, which is typically USD JPY. Aussie Yen, AUD JPY. Then the Pound Yen, GBP JPY. CAD Yen, CAD JPY. Swiss franc Yen, that's CHF JPY. Australia is really the Australian dollar, so it's AUD USD, and New Zealand dollar, which is NZD USD, and then the bottom you have GBP, which is the pound, that's GBP USD. Again, I was saying that there's 28 different variables that, or 28 different currency pairs that we can trade, but they are all a derivative of what I was talking about in terms of the majors here. So we're focusing on the majors, and looks like the euro here is starting to get up to 15.50. So be on alert here. Looking for more upside in the euro, as long as we can stay above 15.27, which is last week's low. We came in, tested last week's low about an hour ago, almost. Came in, let's see here. It's pretty recent. You know, over the past couple minutes. Let's see if I can pinpoint that for sure. Here it is. This is the actual testing of the low, and for me it was right around the no, this is their time. So this is yeah, this is London time apparently. 6:45. It's actually looks like it might have been 2 hours ago. Almost 2 hours ago.
U.S. President Donald Trump threatens tariffs on all
12:30. So that'd have been 11:30 my time.
He's ready to go.
But you can see here that we had a test of last week's low. The market came down and basically used it as support. Market has been rallying off of that low aggressively, and so that sets up for a pretty important move for the rest of the week if we can stay above this low. So what we will be paying attention to that low for the basically for the rest of the week. Vital. All right, if you take a look at the this right here is the 4-hour chart in the euro.
Yeah, absolutely. Good morning to you, Matt. We're just 30 minutes into the trading day, of course. Let's see how things are shaping up across these equity markets. This is the
Do a quick trend line underneath this. This is setting up for a move back up to 1650.
Related business. They do engineering for those companies, design and engineering, and they have confirmed today they're in talks with Apollo and Bain, so some private equity interest.
So right now the market is showing us that it wants to hold. It wants to hold this level. You can see this is the low from last week, and now we're already starting to establish the low for this week potentially. And if it continues to hold, then we're setting up for a move back up to, I think this is the high of last week, right around looks like 1659. So you can see here that we're at the bottom of a trading range, and we need to be very cognizant of the idea that the market is actually establishing a low now. Alright, so we'll continue to take a look at this. We'll continue to follow this. Looks like the euro is up to 1752. Alright, so if you're alert, if you're watching it, there's no reason to be thinking short. Now, do we just get in? No, we don't need to get in right now. There'll be plenty of time to get in. We'll be waiting for this market to actually come back down, possibly test a low, or at least pull back a little bit. Right now you're getting a swift short covering rally in the euro, so we got to be patient and let all of this buying frenzy kind of peter out so that way we can get in. But if this continues to hold, it's going to set up for a nice trade for the week. So it may not happen today. It may happen, you know, tomorrow or Wednesday or you know, we don't know yet. We just know that, see, the market is tipping its hand right now and showing us that there is a lack of selling. There is no selling below this price. So remember, again, there is no selling below 15.24 in the euro, and as long as we can stay above that, then we need to be looking for more upside here in the euro. And I'm getting confirmation in the dollar. Let's go see if I can remember where. Let's see if we can see it. Right now you can't really see it here, so it's just basically holding that trend line. Let's see if I can actually break it out.
The declarations of the Prime Minister, of the Deputy Prime Ministers, and especially of the economy minister, that have said which are the real attitudes of the government. That is,
there it is. You can see here, this is the 1 minute chart on the dollar index, and how the dollar has shown you the exact opposite of what we're looking at in the euro. Remember, the euro is finding strength right now, and the dollar index is finding weakness. You can see how the euro, the dollar basically came up to a high right around 95.5 and basically has sold off from there. So again, this is confirmation that we need to see for the euro dollar. I'm loving this right now for a setup to the upside. You can see how the euro is basically just been on fire ever since it came down to 15.24, and now we're rallying off of this level. So this may actually set up for a good trade for the rest of the day for sure.
We've had a historic day on Wall Street. Lehman Brothers, the 158-year-old firm which survived railroad bankruptcies of the 1800s, the Great Depression in the 1930s, and the collapse of long-term capital management a decade ago.
So you should be focusing on the euro. We're now breaking above the intermediate high here, which is important. This is the most recent high. Notice how the market came down, came up, made a high, broke down, found some buyers. There's a lack of selling here. This is a very aggressive short covering rally that we're pushing up above 1554. So I'm looking for more upside here in the euro.
That hearing started at 9:30 this morning, almost 5 hours. That was the Democratic head of the Senate Banking Committee, Chris Dodd, wrapping up after questioning the head of the Federal Reserve, Ben Bernanke, Treasury Secretary Henry Paulson. It's their bailout plan for the banks that's being discussed today.
Big losses on equities. Take a look at the Dow right now. We are down 700 points to 9,644. So down, well down through that 10,000 level that we first came up through in 1999.
Today's sell-off really comes on the heels of a global stampede out of equities, and in particular point to Western Europe, where the Dow Jones Stock 600 index had its biggest one-day drop since 1987. And the FTSE in London falling to a near 4-year low. Germany's DAX dropping to its low since 2006.
Stocks topple, led by banks as the credit crisis widens and the infection has spread around the world, from Europe to Russia to Brazil. All right, there were some moments that some of us will never forget, highlights of our coverage of the collapse of Lehman Brothers back in 2008. Joining us now is John Geeve, who was the Deputy Governor of the Bank of England at the time. John, thanks so much for joining us this morning, for helping to look back. And I guess the most important thing is, what did we learn then that we can use to make our lives better, safer, more successful now?
Well, we learned a massive thing was the banks needed to have much more capital and liquidity, that regulators needed to understand them better. At that point, the critical point, we learned that investment banks and AIG, insurance companies, were just as important as banks, and they also needed to be protected. I suppose the two biggest things we learned were that contagion in a financial crisis doesn't flow through individual losses. It's not an arithmetical thing that Lehman's has lost a lot of money and it won't be able to pay its debts. It's a confidence matter. It spreads because people lose confidence and trust in the system. And what we learned in the month following Lehman was that only concerted action by all the Western governments, and indeed the Chinese government, together was able to re-establish that confidence which is necessary to a working financial system.
And of course, good morning to you, Sir John. And of course, the UK crisis sort of bookended Lehman in the Northern Rock,
Yeah.
and then so you were already deep into that. And then, of course, shortly afterwards, the implications for RBS and HBOS and the others became clear. When during the Lehman crisis did you start to join the dots to the UK banks? Because it didn't take long for some big action to be necessary from the UK government.
No, I mean, the decision to let Lehman's go, which surprised us. I mean, I think it completely surprised the markets, surprised everyone, because they all thought, we all thought, the US government was on top of this. They'd saved Bear Stearns, they'd saved Fannie and Freddie. Surely they'd save Lehman's, and they just let it drop. we knew immediately we were in trouble. And in the following week, you saw, in our case, Bradford and Bingley, very like Northern Rock, go under. So we had to close that down. You had UBS, you had German banks, you had Fortis in Belgium. I mean, it was literally in days you could see that confidence was just ebbing out of the system. And I think within 10 days, we at the bank were the sole supporters in liquidity terms of HBOS.
More upside in the euro to be expected, as long as the pound Aussie and the Kiwi can comply.
So John, was it important,
right.
do you think, for markets in some ways to allow Lehman to collapse, to show that, you know, you've got to deal with the repercussions of the risk you take in order to put a stop to moral hazard in some ways?
No, I think it was a disastrous mistake. Yeah, you can argue afterwards that it was impossible to step in and help them, that actually it was better in the long term, but I think you could see in the month or two after the failure of Lehman.
Looks like we're trading out. We held the right shoulder, had this level of support here, right around 115, but the market looks like it's still holding the right shoulder, this formation. If you're looking at chart patterns, this is something we've been paying attention to for a couple weeks now. You had this reverse head and shoulders pattern here, and the market right now is actually holding the right shoulder. So this is actually pretty bullish for the euro if we can hold. I'm watching this.
With populism on the rise and threats, in some senses, to some of the global architecture.
Not only is it last week's low, but it's also the low going back to the 23rd of August.
Underneath the political rhetoric, all of that cooperation is.
Okay, so that sets up, if we can continue to hold this level, you know, that sets up a bigger move to the 1950 area, like I was anticipating from the beginning, where the measurement of this, the measured move based on this reverse head and shoulders actually took us up to 1950, 119.50 in the euro. So just got to be extremely patient here. No reason to jump the gun.
The political leaders at that point, George Bush absolutely backed them. Congress didn't, if you remember, rejected their first plan, but they had a president who didn't know much about it, but he could see it was serious and he absolutely backed them. Is that what would happen today? I don't know.
So John, we did see U.S. banks recovering relatively quickly after the financial crisis, certainly relative to what we see here in Europe on the continent and in the UK.
Still, though, overall, the markets are not doing very much this morning.
To recover, and do you think
Pound Canadian is probably the only one that is at the highs at 0.2% positive, and then on the lows you have the CAD yen, which is about 0.2% to the downside. So back to what I was saying in terms of, like, you have this list here that I have. So you can see here that I have all these pairs on a watch list, and this is what you need to probably throw down if you are if you don't have this already. You need to have a watch list. Basically, this is your list of pairs that you're trading, and typically you can bring it up in multiple or a lot of different fashions in the trading package that the charting platform or whatever it is. But you want to get this watch list, and then more importantly, you actually want to track the percentage change on each market. Okay, so if you're not aware, this is what you need to be looking at here. You can see on the right column is the percentage change for these various markets, and this is not correct. The one that I'm looking at right now is not correct because it is evaluating, I believe, more than just what we're the session for today. Okay, so I I generally don't look at this one. I have another one off of the screen that I pay attention to. But an easy setup that you can use is over at TradingView. Let's see if I can bring mine up. I rarely use TradingView anymore. So right now what you're looking at is this is a list on the right hand side, of course, and what you might want to notice is that all of my pairs are set up in alphabetical order here. Okay, that's one thing that I do. First is to list things in alphabetical order, because that allows you to find them quickly whenever you're looking to go and switch pairs, switch charts. The other thing that you want to notice is that on the right hand side I have the percentage change. So the idea is to be able to you can click at the top of the column, and you can actually sort the you can sort them. So what you need to do is you would click on the top right hand corner, and now you can see that in this situation it looks like, according to this feed at least, the pound yen is the strongest, followed by the euro yen, which doesn't actually doesn't fit with what I'm looking at over on my other feed, but that's okay. So anyways, the point that I'm trying to make here is that this helps you actually, it looks like you have to continue to sort them, because they do not continuously auto sort, which is what they should do. But anyways, that's one way of doing it. Surprised it doesn't auto sort, but anyways, that's part of the reason I don't like, not a fan of TradingView. Dollar index holding the level, euro pushing higher. All right, so doing well here in the euro in terms of being on the same side of the trade here. Okay, so like I said, the euro is going to set up. Right now the market is actually showing us what it wants to do. It's setting up for a push to the upside, so we need to be aware that that's going to be the bias for the week right now, is that the dollar index is basically finding resistance right now. So after taking a look at the markets in terms of the European Open, which is the European Open, which was over an hour ago, we have the London session opening up here in about 10 minutes. I'm watching the euro to see if it can stay above last week's low, which is at 15.24, and then I'm watching the other pairs like the Australian dollar, the pound dollar, and the New Zealand dollar to see if they can actually hold as well. Right now I'm showing a little bit of strength in the Australian dollar, getting a little strength in the pound as well. So it looks like we're getting a little bit of confirmation across the board, and this is definitely what we want to see. Yeah, so the next thing that I'll be looking for is to see if the Canadian dollar can actually fall apart here. The dollar is holding a short-term trend line that we could take a look at going back to August, I think 15th or something like that, if you look at the 4-hour chart. But right now it looks like the market is actually holding at that point. And so just keep that in the back of your mind, that this is going to set up for something that we can look at for the rest of the week, as long as the dollar continues to show weakness, and that will set up for strength in the euro. Once again, if you're thinking that you should be getting short in the euro, then let me kind of correct that. You know, the market is not supporting that at this point. You have strength right now building in the dollar index, or in the euro. You have strength building in the euro. You have strength building in the pound. You have strength building in the Australian dollar, and you have even strength building in the New Zealand dollar. You can see that the New Zealand dollar is back above last week's low, and so that's going to set up for this market to actually build a little bit of strength. Same thing. Notice how the Australian dollar actually held last week's low as well too. So looks like we should be paying attention to the euro and the Australian dollar at this point. I'll be watching the Australian dollar, looking for a setup here, right around looks like 71.07 is. Looking at the moving averages on the 5-minute chart to see if I can find some sort of a buying opportunity there. So just being patient here. No reason to actually jump the gun, but you know, I do know that folks are actually going to be doing that. So what am I? This is the 50-period moving average on the 5-minute chart. If I can get a pullback to 1548 here in the euro, then I'll actually consider taking it. Again, as long as the euro continues to trade above this, then I will look for pullbacks to the moving average there, and actually look to size in there. Same thing with the Australian dollar. So let's bring up the Aussie. The Australian dollar showing the same kind of, you can see here that we had a push down to last week's low. Now we have rallied off of the level, and it continues to show strength here. So again, I'm liking what I'm seeing across the board in terms of the dollar finding weakness. Just gotta be patient here and let the market actually come back to me. Okay. If you have any questions out there, don't hesitate to reach out. I need to post this.
The Aston Martin DB10 or the Ferrari super fast. Really rich people are spending a ton of money right now. That's why these shares are up.
So if you're interested, what you can do, if you want to gain insight into the posts that I'm putting, you can actually take a look at the portal or the member area of my website at garciaresearch.net. This right here is the actual member portal, and inside the member portal you can see that you have the live feed that we're looking at, and then just underneath that is a running log of what I'm looking at in terms of my thoughts, and most likely the trades that I'm looking at taking, and of course my feed. And then there is some other very important information. We talk about covering the various markets that we trade, and then of course you can see that there's a lot of potent information in terms of like helping you learn how to trade and whatnot. So just keep that in mind whenever you're trying to keep up to date with what we're looking at in terms of trades that we're looking at. Again, in order to get access to that, it's a free membership. There's no charge. Go to garciaresearch.net, become a free member, and then you'll be able to access that in the member portal. Five minutes to the London session open. The thing to emphasize here is that we don't want to be chasing the market. We don't want to be sitting here and feeling an anxiety because the market continues to go higher and we're not in the trade. That'll be something that you have to fight on your own, but you also have to understand that the market has a tendency to ebb and flow, and so that's what we're waiting for, is the market to kind of come back a little bit, and for all this buying frenzy to kind of settle down, and the market to kind of retrace a little bit before we actually get down. So there's no need to actually feel like you're missing out, because if it's an important move, or if it's a strong move, then the market will continue to move higher. And so there's no need to even think, it's not important to catch the low, or it's not important to catch the high. It's not necessary to catch the high or the low of the move, right? You don't have to bottom pick, you don't have to get the top tick either. So you just want to make sure that you're in the middle of the trend. You just want to make sure that you're stuck going in the same direction as the market, so that way you can ride the wave, so to speak. Wherever the market goes, you just want to be on the train. And so that's why I'm just sitting back. I'm not really concerned with actually catching the dead low of the week, for that matter, at least for right now. You see what I'm saying? I just think that there's going to be plenty of time to let this market actually set up. So what we'll do is we'll be looking for patterns to trade off of this. One of the patterns that I'll be looking at is a flag pattern. So when you take a look at your reading material, then you should probably pay attention to something known as the bullish flag, which is what we'll be looking at in the euro. And most likely it'll evolve over some time, so still got to be patient. This may not even happen until probably the New York trading session, but it's okay, because right now we know that the euro, at the very least, like I said, the market is tipping its hand and showing us that it doesn't want to continue to go lower in the euro. Let's see here. Okay, once again, this is the trend line here that we're watching. It goes back to the 15th of August in the dollar index futures. As long as we can hold below this this trend line, as long as the dollar can actually drift back to the downside, that'll continue to be bullish for the euro and the Australian dollar, which is right now I'm watching the Australian dollar. The Aussie, I'm watching it actually on another screen, which is why you don't see it here. But you can see 71.21 right now is the current trade. It continues to trade above last week's low. Same kind of setup as what we're looking at in the euro. Notice that the euro came down to last week's low and actually used it as support. So euro currently trading 15.66. That's very nice. Okay, so nice little breakout there. Continues to show strength. Looking for an upside target of 116.50, I think, was the intermediate high. Then after that, chances are we can actually be running back up into, I think, 119.5. Once again, you're looking at weekly charts. The important thing is to have a handle on what the higher time frames are doing, so that way you can understand what's happening on the lower time frames. You don't want to be looking at charts that are you know, intraday charts if you don't know what's going on the higher time frames. So I like to just sit here and look at the weekly charts because you know, I already know what's happening on the lower time frames. We'll go back and forth though. We will take a look here at the 5-minute chart. We'll take a look at the 15. But the important thing here is that the only reason why we know what's happening on the 5-minute chart here is because we know what's happening on the weekly chart. Again, the weekly chart, the dollar index futures held the low at 1524, and this is last week's low, and the market has basically had a short covering rally after that. So I'm waiting for a bull flag or a double bottom test. Okay, so the expectation here is some sort of a test of the low, or we're gonna get some sort of a bull flag. So just got to be patient for this market to actually set up for me. Okay, looking for some sort of a chart formation like this. Looking for the market to kind of drift down a little bit and then break out. Okay, so this is what your bull flag is already going to look like. Right now you can see that we're actually setting up what's known as the flag pole. Okay, so you got to be very patient and let this stuff play out. The reason why we wait is because this increases the odds of the market reacting in our favor. Okay, here's the pole right here. Pole, flag, and then we'll get a breakout. This may not actually be the setup, but who cares? At least for now. Well, we'll let the market determine, let us know what it wants to do. So if you, what's important is to actually have your reading material handy, so that way as the market evolves you can actually compare what you're looking at on the chart to what you're reading, what you're studying, and go back and forth. You should always have your reference material handy, so that way you can always take a look at what the example that you're trying to follow. In this situation, I just want some sort of a pattern to get me in the trade. Currently looking at the board again, and it looks like the dollar index is still trading right around 0.1% on the green side, but the Australian Canadian is actually right around 0.3 positive. Okay, so Aussie CAD looks like Aussie Swiss. I mean, overall the Australian dollar is the market that's actually even more stronger, I guess stronger than the euro for that matter. Nice little rejection there in the dollar off of the trend line that I showed you a minute ago on the 4-hour time frame. So I'm looking for more upside in the euro. Now we're starting to see a little bit of a pullback here, a tiny bit of a. You can see how the market is going sideways, consolidating. It's basically this is right after the London Open, so this is kind of peculiar. All right, so this is what I'm looking for: is the London session open found some resistance right around 115.70. Now the question is whether or not we'll go down and use the support here at the 50-period moving average, or whatever the case may be. We're starting to see some profit taking here in the euro and the Australian dollar. So once again, the bias right now is that we continue to look for more upside in the euro, but I'm looking for a little bit of a pullback in order to get long. I think that's actually what we're going to start to get right now. Once again, if you have any questions out there, don't hesitate to reach out. There should be a chat box in the YouTube live stream area. I'm not exactly where it would show on your end, being the viewer and all, but if there's something that you think you would like to have covered, don't hesitate to reach out. At some point today, perhaps we'll actually cover some of the other pairs, taking a look at some of the taking a review of last week, and maybe even looking at a outlook for the coming week and some of the other pairs. Right now, just looking at trading, getting set up here for the euro. I think that this is actually setting up. This is actually going to be something that we need to pay attention to for this week. If the dollar cannot get above that trend line that we were referring to on the 4-hour chart, then that's going to be pretty important.
President Trump, I'm concerned that this is what we might see indeed. So that would be quite an aggressive move. China will retaliate. The problem is that, as you know, Chinese imports of U.S. goods are much lower than U.S. imports of Chinese goods. So when we reach 250 billion, probably, I mean, at that point, China will have used all its potential in terms of retaliation. So
what does it mean for the market?
The market is going to remain fragile in the near term. I think this is partially priced in, that this escalation is going to be seen sooner rather than later. But again, I'm not sure it's fully priced in. If we get 25%, some retaliation from China, including making it more difficult for U.S. companies to do business in China, which will be another form of retaliation.
As we sit and allow the London session to open up, looks like the activity level is relatively quiet as well. Looks like we're getting a little bit of a move in the Swiss franc. Nothing really exciting going on, other than the euro and the Australian dollar, of course. Okay, so keep an eye here on the the euro. We'll go back and forth between the euro and the Aussie because these are the two markets that have really caught my attention. Okay, so sideways consolidation here in the Australian dollar as well. Just waiting for these markets to give us a nice entry level. You can see here that the even though the Australian dollar was going sideways there for a little bit, the euro continues to stay on the highs here at 15.67.
I think they want to stay on the path. They will hike rate in September. We think they will also hike in December. unless we see that propagation from EM markets to developed markets.
Across the board, there's only a handful of currency pairs that are red. Swiss franc. Alright, let's go take a look at the Swiss, because the Swiss franc looks like it's actually...
Does this, if it inverts, does it mean that we're seeing a slowdown? And is there a chance that actually we get a slowdown?
Looks like you had a bottom there at 96.88. Now you're right back up at 97. So that's kind of interesting. I'll go back over to my other chart and do some... get an idea about what we're looking at. Again, back to the weekly chart so that way we can compare this week's trading action to last week's trading action. Okay, so this right here is a weekly chart of the Swiss franc, and take a look. Even though the market looks like it held 96.80 today and it's back up at 97.07, you can see that really we are still just in between last week's high and low. So really nothing to speak of. In other words, the market really is not moving at this point. In other words, it's just trading in between last week's trading range. That to me is a very key indication of the lack of institutional involvement. In other words, the institutions really don't feel the need to actually take any action right now. However, we've already established on the euro the fact that the market had the need to come back and test last week's low. Okay, so this right here is last week's trading bar. We came down to last week's low, used it as support, and now we've bounced off of it, trading at 115.66, and it looks like the possibility to go up to last week's high up at 16.59. So again, the idea here, the trading idea, or the scenario that we're trading, is that as long as the euro can stay above last week's low at 15.27, there is a higher likelihood that this market will go up to 16.50 and then 17.30, which is the previous high. Okay, so you got these two highs here coming up. You have last week's open at 15.97. That's a no-brainer. And then you had the week before that at the week before, which was the week of August 31st, the low is right around 15.83. Okay, so these are levels that I'm going to be watching to see if this if this market can actually get above these levels. You have last week's closing price, last week's opening, the previous week's closing, or the previous week's low. Okay, so just it's like looks like on this chart we're looking at 1625. It's your point, your profile, market profile chart. Again, holding right above the highs, right at the highs at 1570. Looks like a little bit of a pushback here in the Australian dollar coming. But again, no activity right now. I guess you could say, and this is what I should probably emphasize, is that although the euro is going higher, overall the activity in the market is relatively quiet. So it's pretty important to pay attention to the fact that the euro is moving, but the other currencies really are not, and that's indicative of the fact that, like, when the institutions get involved, when the institutions start trading, because they have to, in other words, they have to make moves, they have, you know, some changes on their economic models or whatever the case may be, they'll have a tendency to actually trade across the board. They will place trades. They'll be buying currencies all over the world. They'll be buying currencies across this whole entire watch list. They'll be buying and selling in groups. They'll be making moves in all the markets. And right now we're not seeing that. So that's why I'm rather cautious in terms of actually getting positioned. And of course, the Australian dollar, the Aussie, is at the end of their business day, so that's why I'm not really watching the Australian dollar per se, because the current business hours are in Europe and London, which we would consider to be the currency capital of the world. So we need to be looking at the euro and the pound. Australian dollar looks like it's trailing off a little bit here. So again, watching it, the reason I'm bringing this up is because this could have an impact on the euro. You can see how that we put in a high right here at 71.23. We're trailing off, currently trading at 71.13. But again, I'm okay with that as long as it doesn't go below 70.96. I think that's the level. 70.96 should be the low. Yeah, 70.96. This week's low is 70.94.
Thank you so much, Taylor. Now let's talk Italy. And Intesa Sanpaolo chairman Gianmaria Grospietro said that the Italian spread will decrease once investors realize the real economic situation in the country. Well, he spoke exclusively with me on the sidelines of the Ambrosetti Forum in Cernobbio, Italy.
We welcome the declarations of the Prime Minister, of the Deputy Prime Ministers, and especially of the Economy Minister.
So you were noticing there a minute ago that the Australian dollar is actually pulling back. Remember I was showing you the Australian dollar here is actually, it came up, hit a high, and now it's actually pulling back. Notice how it's actually like going down. It looks like it's showing weakness, but the crazy thing, and this is why we're actually paying attention to the euro, because the euro at the same time is going sideways. This is a subtle sign of strength. The idea that the euro has not gone down like the Australian dollar, the euro is actually going sideways. This is a very nice sign for me in terms of expecting the euro to continue to move higher. So I like what I'm seeing in the euro right now. It looks like that we could expect to see more upside here as long as the euro does not dip very far, while the dollar is finding a little bit of a retracement itself. So you go take a look at the dollar. Let's see what's... You can see after this sell-off here in the dollar, right? This sell-off here in the dollar is the mirror image of what we were looking at in the euro with the rally there. And now the dollar is moving sideways. Notice how the dollar stopped making lows right about here. Okay, you can see how it's starting to go up again. Right, over the past 10 minutes, the market is starting to rally a tiny bit. Although it's a tiny bit, you can see the change in character, where over the past couple of hours, I mean, it was just one down bar after another. Now we're actually consolidating here. Market is relatively going sideways, so that's why we want to be on alert here. Be careful with your trades if you're getting position here. You don't want to be buying into this right now. I'm waiting for this dollar to actually reestablish its downtrend before I actually take a look at going into the euro.
Over the past week, some 40 basis points or so. So the market seems to be a little bit less concerned. I think this is short covering more than anything else. When we say respecting the rules, what are we talking about? Yes, I do believe that they will be below 3% and quite easily so. Nevertheless, you know that the plan agreed with the EU for next year was a deficit of 0.8%. And therefore, if they end up 2.2, 2.5%, this is still very substantially above that plan, and I think that's enough to create some tensions. So Yes, we are seeing a bit of short covering, a bit of stabilization now. I think, to be honest, the situation is going to remain tense as we get the fiscal announcement by end September.
So, Vincent, let me bring you over to this the spread that you're talking about, which is the Italian-German 10-year yield. Is this the right one to look at, or do you look at, for example, Italy-Spain?
I look at both, but I think this is the most usual metrics that people are going to watch. And as I said, we've seen some pullback. Technically, there's room for a bit more pullback, but I don't think it's going to go far. Let's see what the budget plan brings in late September, mid-October, when the discussion with the EU open. But as I said, I think the discussion is going to be quite tense and quite confrontational, to be honest. And I'm not sure this situation will really cool off until the European election, which is only in May next year. So we still have quite some time.
And then, Vincent, coupled with that is also the change at the top of the ECB. How will that move euro and also some of these periphery bonds?
Yeah, well, that's still a bit far away. Mr. Draghi will stay in until October 2019. But you're right, at some point that will become a concern. The change of personnel at the ECB could also have some implication on the spread markets. We're not too concerned there, you know. You are going to see some changes at the ECB, but the roles in the position is quite slow, and you know the decisions are taken within the council. I don't think that a change of president is necessarily going to radically change the stance of the ECB.
What do you make of the Swedish elections? Too close for all?
Very close, but I would say the market maybe is reacting slightly positively because it's not as bad.
Pound Swiss looks like it's gaining strength right now.
Fear, in particular,
Currently trading almost 0.4%.
Seems to be just below 18%. You know, somewhere concerned about 20% handle.
You see how it's just a nice little dramatic uprise here. Again, this is the importance of having your watch list with the percentage change. This gives you a quick glimpse into what's happening right now. You see on the highs you have the pound Swiss, the Aussie Swiss, and the Euro Swiss are basically the ones that are on the highs. Let's see, that's the pound Swiss, this is the Aussie Swiss, the Euro Swiss. Looks like all of the Swiss pairs are picking up a little strength here. There's a pound Swiss, here's the Euro Swiss. Okay, so what that is, that's a confirmation here in terms of the move that we're looking at in the Swiss franc. So this is the actual Swiss franc. This is the dollar Swissy, and the dollar Swiss franc is moving up. At the same time, you had the same kind of confirmation in the pound Swiss, Aussie Swiss, Euro Swiss, and therefore that gives a little bit of a confirmation to this move. Nice little push up here in the Swiss franc. The problem though is that that goes against what we're looking at in the euro. Here's the euro, looks like sideways consolidation, getting ready for the next breakout. Okay, so looks like a 1570 is your breakout point. This market's getting ready to go higher.
You know, I don't think talking about a suicide vest was very welcome, and is going to bring any calm to that situation. So,
but does that get? I mean, does that actually does it make him closer to be prime minister, or does it push it further away? Right, that he's prime minister. And again, how do you know, is pound fairly priced? Do we need to wait until what December brings?
Yeah, I think it shows that probably the desire on his side, the push on his side, is getting stronger. That he has the support, I don't think so. But the moment of truth really will be when they come to find an agreement with the EU, which I think will be at the earliest mid-November, but actually it could be later. And then we have to see whether that agreement is ratified by the UK Parliament. And clearly it's not a done deal. and that's when we could see quite a rise in political uncertainty in the UK.
Okay, so what do you do with UK assets from now until then?
Still quite defensive, to be honest. I mean, if you look at the equity market in terms of valuation, it's actually relatively attractive. But of course, there is a lot of political risk. And same thing when you look at sterling, it's quite cheap, but I think
Just gotta be patient here.
As the uncertainty remains very high.
Gotta be very patient. Once again, I talk about patience being the vital aspect of your trading. We can sit here and go on and on about trading tactics, trading strategy, but none of it really matters if you don't have the proper mindset. And so that's why we want to emphasize that your trading psychology, the psychology of trading, is probably more vital when you're actually trading. The mindset that you use to approach the markets is extremely vital, and you could say that it's even more important than your trading strategy, which is why I don't really get too caught up in the actual trading strategy. The idea is to pick a strategy and then to stick with it. But in most circumstances, if you're using the classical technical approach to the markets in terms of chart reading and patterns and stuff like that, that really is helpful. The other aspect is multiple time frame analysis and then intermarket analysis. These are very important principles, or should we say concepts, that you need to master when you're actually trading your account. So it looks like right now the dollar index, again, dollar index is still only about 0.02% down. I mean, we're talking about 0.02%. Market really not doing any kind of a movement there, but the fact is that we're holding that trend line at on the 4-hour time frame. So if that continues to hold, then that's going to set up for more upside in the euro. Again, euro came down to last week's low and used it as support, which for me is actually pretty important. That sets up for a push to the upside for the rest, possibly for the rest of the week. Also watching the Australian dollar to see if it holds last week's low as well. It kind of did the same thing where it dipped below last week's low, but it only traded below last week's low by 2 pips. So again, we're just getting the week started. We're just getting this trading session started. Here we are, about 30 minutes into the London trading session, and the activity level that I'm seeing across the board, the London session liquidity, is relatively low. There's absolutely nothing going on in terms of the market moves, other than the euro for that matter. But the only reason why the euro, or should I say, the only reason why I'm paying attention to the euro is because we had that test of the previous week's low, and that kind of insight can give you something to look forward to going into the rest of the week, possibly even for the New York trading session a little bit later on today. The aspect is, or the important thing to be looking for, is that I'm looking for bullish bias in the euro if we can hold last week's low, which we did at 15.24. As long as the market can stay above 15.24, I'm looking for another breakout here right above 15.70. Again, my next target is somewhere around 16.50. Then from there, I'm looking at going up to probably about 17, I think 17.5. And then from there, if we can hold that 15.24 for the rest of the week, then I'm looking for a push all the way to 19.50. So the euro is actually setting up for a pretty good move for this week if we can stay above the low that we've already established this morning. So at the very least, I'm going to be paying attention to the euro. Again, the dollar index futures holding a downtrend line on the 4-hour time frame, and at this very moment, that's setting up for a nice push in the euro. The other component here that I'm watching is the Australian dollar, which dipped below last week's low by 2 pips, and the fact that there was a lack of selling down there actually provided or presented some short covering rally. The problem is that the Australian dollar is trading off a little bit compared to what we're looking at in the euro. Again, across the board, nothing really happening. the strongest currency that I show right now is the pound Swiss at almost 0.4% bullish, and then on the weak side you have the Swiss franc yen down negative 0.2%. The dollar index future getting rejected. Now I'm waiting for a little bit of price action here to develop. Most important thing though is the euro staying above last week's low. If we can stay above last week's low, then I'll continue to look for more upside here. So at the very least, be on alert. Focus here. You can see here that the euro is consolidating after finding the lows. So we found the lows last week, bounced, and then right here is where we actually open up the London session for now. Okay, so we putting in the high of the session at this point, right at the London session open, and we've gone sideways, which is actually a good thing compared to what we saw in the Australian dollar. The Australian dollar actually started to trail off. So take a look here real quick at the Australian dollar. You can see the Australian dollar is actually pulling back to the 50-period moving average on the 5-minute chart, and this is actually setting up for a nice buying opportunity as long as we can stay above this. The problem is that the moving average is actually going sideways, and that is definitely not something that I like. My overall bias here is bullish in the euro and the Aussie as long as the dollar can hold. Let me give you a quick glimpse into that. Here's the dollar on the 4-hour time frame, and the market, if you were to draw a trend line from August 15th and extend it out, you could see here that the dollar is actually holding right now. Actually, we're testing the backs, or we're testing the trend line. So if the market can actually hold, alright, so if the market can actually hold this trend line and then start to work its way down, then I'll be looking for a nice push in the euro over the coming days, that's for sure. Go look at my point and figure real quick. This is a point and figure chart.
Sticking to our international agreements. Clearly, growth comes first, and the right to work, the right to a pension, to health. But we will try to provide everything. We have 5 years ahead of us, not 5 months, notwithstanding what Renzi thinks. Over the next 5 years, we will carry everything out.
Okay, sideways consolidation here in the euro. Looks like the 50 EMA on the 5-minute chart is actually starting to rise. So this is a good thing here. This is what I want to see in terms of just be patient, because there's going to be plenty of time for us to actually get positioned. We only need like one really good trade for the whole entire week. Even though, you know, I can assert, or I can confirm, or I can promise that there will be plenty of opportunities out there that we can take care of or take advantage of. We really only need to catch one flyer. That's kind of what I'm just hanging tight for. Let the market come to you, and then just wait for the setup. The idea is to allow the market to do what it's going to do, and then at some point it's going to give us a nice little entry. Morning out there. Welcome to the new week of trading here in the London session. I say has only been open about 35 minutes, but the idea here is to allow the market to get established. Again, very light activity, but we're just kind of hanging on. I'm rather bearish on the dollar at this point because it held this, or it's holding this trend line. So I'm looking for a nice little breakout here in the euro. I'm looking for looks like the Australian dollar is actually holding right now, so that's actually a good sign. Okay, keep an eye on the Australian dollar, because the Australian dollar again The Australian dollar and the euro were actually, let me just go back to the weekly charts here real quick. A quick look at the weekly charts. Here we are taking a look at it. This is why I'm focusing on the Australian dollar right now. The Australian dollar came to last week's low, and then it actually held last week's low. It only dipped below last week's low by 2 ticks, and then it's actually starting to bounce above this. So the other thing, so let's take a quick look at the lower time frame real quick. The Australian dollar is actually getting a nice bounce right now, so if you're looking for a trade, this is actually kind of important. You had a bounce right here at 71.09. Now we're back up to 71.16. So if you're starting to initiate trades, my problem though is the moving average at this point is going sideways, which is part of the reason why I'm not getting position here. I want to wait. I'm going to let this market get a little bit further up and actually have the market start to follow it. In other words, the moving average, I need the moving average to actually angle up a little bit higher. But once it does that, then I'll actually probably look for more upside here in the Australian dollar. Now take a look at the euro. The euro is back above my key moving average on the 5-minute time frame. This is actually kind of bullish too. And if you go back to the weekly chart, same kind of thing here. We came down to last week's low right here at 1527. This week, or right now, we actually put in a low at 1524, and then the market actually basically skyrocketed after that. Not skyrocket, but you know what I mean? It just basically pushed off of this low. So here we are actually showing strength in the euro. I'm looking for this market to set up to move higher. On the other, one of the other ones that I'm looking at is the New Zealand dollar. Notice how the New Zealand dollar was only incrementally below last week's low. Here's the low for this week is 65.10, and last week's low is 65.26. So we only went 15 pips below last week's low, and now we're actually trading right around last week's close, but you can see that we're actually showing strength. So I'm liking the idea of upside potential here in the euro and the pound, or the Australian and the New Zealand dollar. Okay, that means that there is a chance that the pound dollar could actually break out of last week's high at 30.31. Okay, so I'll be looking for strength here in the pound as well. But when you take a look at the other side of the coin, absolutely no movement in the Japanese yen. I mean, just completely quiet here. Let me just make sure that, make sure that I'm not looking at a dead chart. Okay, so you can see here, this is a weekly time frame, and you can see how the Japanese yen has been nothing but sideways consolidation going back 1, 2, 3, 4, 5, 6, 7, almost 2 months here of just sideways consolidation. So I probably would not be watching the Japanese yen, that's for sure. All right. And then the other one is the Canadian dollar, for that matter. The Canadian dollar is actually one that I'm looking for possible breakout of last week's high.
2 weeks in the UK in relation to our banking system and others across the world. Those were what the debates were about.
So with hindsight, should the UK have done anything differently?
I think, if anything, we should have. I think maybe we should have just nationalised HBOS rather than merge it with Lloyds Bank. I've always thought that, but that had actually been agreed 2 days before I joined. Maybe we should have challenged it and gone back the other way. I think, if anything, we should have gone earlier for bigger equity increases in the banks. I didn't know that then, but I ended up as a super hawk on banking capital. I think we were allowing the banking system to run before the crisis with ludicrously low levels of equity capital, and in the debates subsequently about the Basel III reforms, I was always a hawk, but a hawk then meant bringing it up by another 0.25%, another 0.5%. But you know, look, I think the banks ought to run with equity ratios of 20%. I think we've got it fundamentally wrong. On the other hand, we did some big things. I mean, the capital ratios of the major banks are now effectively about 3 to 5 times higher than they were before the crisis.
So what do you think the main consequences of the financial crisis and the leading collapse are? I mean, you know, regulation of the banks.
The consequence was the recession, the global recession of 2009, which I think, and the incredibly slow recovery. And that was really a consequence of two things. One, that there was a huge financial crisis in 2008. And two, that came at the end, not just of 5 years, but of 50 years of the growth of leverage. And my own thesis is that we now have to focus on leverage in the real economy as being our big challenge today, rather than the financial system itself. I hold the somewhat unfashionable point of view that we probably are much safer than we were in 2007 and 2008 in relation to the financial system itself, but I think we have huge unresolved issues in the global economy about our reliance on debt.
Okay, so once again, just kind of being patient, at least for right now. Looks like the Australian dollar is giving us confirmation we're looking for. So I'm just sitting on my hands at the moment, but already have an idea in terms of bias. We have, you know, just to be patient, and then you know, this market is setting up for us. Just let the market come to me. Once again, if you have any questions out there, don't hesitate to reach out. If you need some clarification, feel free to chime in the chat box.
And still close to zero everywhere else. And if we get a major turn down in the global economy, are we going to be able to react with the interest rate cuts and the fiscal stimulus that we responded to in 2009? We've used a lot of the ammunition already. So my worry is more about debt in the real economy, households, corporates, leading through to a slowdown and the difficulty of responding to it, rather than any one institution suddenly going bankrupt.
I mean, it's all about timing, right? It depends on whether you're expecting the slowdown to come before interest rate normalization.
That's right. The issue is we are having clearly a global recovery at the moment. It's very important to realise why it's occurred. It's occurred because of massive fiscal stimulus. I mean, China took its fiscal deficit from about 1% of GDP in 2015. It's now running at about 4%. America, which has slowly been, the US, which has slowly been bringing down its fiscal deficits, has now completely reversed that with the Trump cuts, and that has taken, you know,
okay, so you know, once again, we'll be watching the Australian dollar here, because the Australian dollar is actually acting nicely. Okay, so just keep an eye on the Aussie, because the Aussie is actually the one setting up for, you know, it looks like we're gonna push above 71.20 at least for right now, but we're at the very beginning of this move that's coming, I believe, when it comes to looking at the weekly charts. Again, upside potential here in the Australian dollar looks like potentially moving all the way to back up to 72. So the idea here is, as long as this market can continue, let me show you what I'm looking at in the euro, or the dollar index. Let me just give you a quick idea here for something that you're watching on your charts. If you're looking at the dollar index, now the dollar index futures, going back to the 4-hour time frame, looking at the 15th of August here, you can see that there's a high over here, and then you connect the trend line to the September 4th high and extend it out. Right now, the dollar index futures is trading right at this trend line, and the idea is that on one of my other feeds, I can see that we're already getting a rejection of this level. All right, so what I can do is show you just real quick. You can see here on the 5-minute chart in the dollar how this high over here is essentially that trend line that we were actually looking at a minute ago. Okay, so you can see how the market has been trailing off here, and now we're actually going sideways. And what does that mean is that we're getting ready for the next move. The market has a tendency to trade in two different fashions. So the one fashion is what we call an impulse, or we call it a directional move, right? So you can see how the market actually impulsively pushed down to the downside. I mean, completely just lows, or should we say down bar after down bar here for a duration of time, and now we're actually going sideways. Now the next move, considering that we're expecting this trend to continue, is that we should expect the dollar index to actually break below this low. Okay, so because the market is moving in a downward fashion, or it's in a downward trend, then we should expect a break to the downside. That's the expectation for the next move. So now that we've established that, we gotta clear my throat. Sorry about that. Now that we have that established, okay, so that gives us something to take a look at. And remember, the idea is that the euro is going to do the exact opposite, pretty much. So you can see here that the euro is ready to break out of the upside. Okay, so we had the up move, which is the opposite direction of the dollar. And what I always like to do is I like to focus primarily on what the dollar is doing, and then I use that as a basis for what I can expect in the euro. So right now I'm actually looking for a breakout of this rectangle here, and if everything goes well, then we'll get some sort of a continuation. Now a confirming factor here, again, going back to what I was talking about in terms of my grid. This right here is the pairs that we trade, of course, and as you see up in the top left hand corner, you have the dollar index futures, and then the euro is just underneath it, where they go in the opposite direction. The expectation also is that the Australian dollar should actually go in the same direction as the euro. In other words, the dollar, if it goes up, then the euro, the pound, the Australian dollar, and the New Zealand go down. In this scenario, at this point, we are watching the dollar go down, which means that the euro, pound, and Australian dollar, New Zealand dollar should actually go up. So with that in mind, we can go back to what we're looking at in terms of the Australian dollar. And you can see here that the Australian dollar is actually setting up for a move, another move to break out of this high here at 71.23. We got a confirming bias here in terms of the euro and the dollar actually, or the euro and the Australian dollar moving in the same direction. So once again, it's vital for us to actually use the comparative analysis, or the intermarket exchange, where we're comparing multiple markets that have the same correlation, and then using them to confirm one another to enhance our bias, and basically to actually build our confidence that we can expect the market to go in one direction. So for this particular scenario, I'm thinking that the dollar is going to move lower, which means that on the opposite side we can expect the euro to go higher and the Australian dollar to go higher. The reason I'm picking the Australian dollar and the euro is because, remember, they bounced at last week's low, and they actually held last week's low. So this is setting up for a potential move for the whole entire week that we can expect. The other pairs that I'm looking at, of course, are the pound and the New Zealand dollar, but they're not really trading. The pound dollar is still in last week's trading range, so I want to wait till it actually breaks above last week's trading range. The New Zealand dollar actually went down below last week's low, but it only traded below last week's low for about 15 pips. So, and then it rallied, and now we're actually back trading up into last week's trading range, which is actually pretty interesting. So again, we're getting the confirming bias that the dollar is actually ready to move lower. The overall activity level in the market has been relatively quiet you have the dollar index futures is trading practically right around the unchanged level. The only markets that I'll be looking at is the Swiss franc, which is actually building strength. The Aussie Swiss is right up at 0.4%, and the weakest market that I'm looking at is the Swiss yen at negative 0.2%. But again, the important thing here to emphasize is how the euro and the Australian dollar are the horses that I'm watching right now. All right, so again, back to my weekly charts. The reason why I'm paying attention to, and again, the reason I focus on the majors is because from these major pairs here that you're looking at, you can actually you can trade up to 27 different pairs. Okay, we already covered this a minute ago, but you can see here. Here's a watch list of all the various combinations of trades that you can actually take. And in the moment, that's probably a little bit more advanced. So I try to emphasize focusing on these pairs for those that are struggling, those that are beginning, those that are actually using, or they're still trying to get their footing together. We don't necessarily need a lot of indicators or anything like that. We just need to be able to read the market and let the market tell us what it wants to do. And in this situation, the market's already given us, it's basically already starting to give us the insight that it wants to go higher. So as you can see here, pushing above the high here at 1570 momentarily, and then we're getting the breakout that we're looking for. Let's go take a quick look at the dollar. Dollar looks like it's still in that trading range that we're looking at, but it came up to the upper end of this trading range, and now it's finding some rejection. So it looks like the euro is actually setting up a new move to the downside here. Right now we're at 1570, and I'm thinking that as slow as it may be in the other pairs, we're actually getting a nice little move here. So I'd be buying the euro at 1560. If you're sitting on the sidelines and you're looking for something to do, thinking that the euro coming down is 1560 would be a nice area to test alongside, with a stop just beneath the 5-minute 50 period EMA down at 1554. Okay, I typically don't like to chase a breakout, so what I'll do is I'll actually wait for the market to actually suck in the longs here, and then come back down, come back and try to suck in the shorts, and then actually wait for a rejection down here, and then look for the market to go up. At the same time, again, I'm watching the Australian dollar, because the Australian dollar is giving me a little bit of a heads up. But the problem is that, again, the activity level is relatively light. Okay, the euro is really only up, according to my chart, it looks like it's only up about 0.1%. So we're just getting started on the week. Got plenty of time, and we only need 1 or 2 trades for the week in order to to make our week, for that matter. I mean, we can easily get a couple hundred pips on one trade if we actually if we take our time and just let the market do what it's going to do.
Leonardo says ATR is in talks with alternative buyers for the remaining aircraft in a €1 billion deal with Iran, which it can no longer deliver due to sanctions. Leonardo's chief executive, Alessandro Profumo, spoke to Bloomberg at the Ambrosetti Forum in Chernobyl.
We work in Iran only via ATR, and we don't expect any meaningful impact on both ATR and Leonardo.
How many ATRs have been delivered to Iran already, and how many are already assigned to other countries?
We have already delivered 12 aircraft, and we are working very hard in order to reallocate on other countries the remaining 8.
Are you in talks to sell the remaining ones? So how are you confident?
Once again, just letting the market get set up here, okay? The euro broke out initially right now of this trading range, and the idea is that we should see the market build strength again, holding last week's low. So I'm looking for this market to continue to rally, and this could actually set up for a nice move for this week.
Shares are higher after the company named Romander as the new chief executive. Posted strong sales growth boosted by Asia. Bloomberg surveillance report continues in the next hour. We'll be looking at this. We'll be looking at a lot of stuff to do with trade.
About an hour into the London trading session. Okay, so at this point, the idea is to let the market get established. Still early in the week. The pound dollar, again, I was looking at the pound, and the pound really isn't doing much, but the Australian dollar is. So the Australian dollar is probably something you should be paying attention to. Okay, you held the 50 on the 5-minute chart a minute ago, and we're getting ready to break out of this this high at 71.23. Looking for more upside here. Looks like this market is definitely setting up for a decent move to the upside. My current target in the Australian dollar is right around 72.35. It's about 100 pips away. So I'm looking for this market to actually continue to rally. And then the euro, of course, is actually breaking as well. Okay, there goes the Australian dollar. So once the Australian dollar breaks above this high at 71.20, then we can actually possibly look for this market to kind of kick back a little bit. In other words, they have a tendency to push the market above a key level, and then they'll sucker in the shorts and squeeze out the weak longs, pushing it back down to, say, the moving averages. And that's actually where I would probably get positioned if you're sitting on the sidelines, right around 71.10. Again, looking at the euro. The euro is, it's still struggling with this level, but you can see that it's not trading off. So more upside to come in the euro. Dollar index futures, let's see if it's broken down below our trading range. There it goes. It actually looks like it's ready to break down below our trading range. So again, this is giving us confirmation that we're looking for in terms of more upside to come in the euro. Again, I want to go and take a look at the weekly charts, because this is pretty vital in terms of giving us an insight into what we should be trading. If you take a look at your weekly chart here, again, right here at the let's take a quick look at the Swiss franc here. The Swiss franc is trading inside of last week's trading range, and therefore I really don't want to get overly excited about that. We are still inside the trading range. The Canadian dollar is inside its trading range as well. The Japanese yen is trading inside of last week's trading range as well. None of these three across the top have come to last week's high or low. You can see they're in the middle of the trading range pretty much. But on the bottom here, the euro actually came to last week's low. So let's talk really quick about this. The euro came down to last week's low and traded, looks like below it by 3 ticks. Okay, so the low for this week already is 15.24, which actually took out last week's low at 15.27. Now, assuming that this continues to hold, all right, my target for the euro is going to be probably up here at last week's high. Last week's high is at 16.59. Let's just go through the actual levels here that I'm looking at. First of all, I'm looking at not last week, but the week before. The week before, the low of the week before is at 15.83, which we'll take that here within 10 ticks. That can happen within the next hour or so. And then from there, you have last week's open at 15.95, and then you have the previous week's close at 15.99. All right, those are really easy targets, I think. But that's why I'm saying, like, I believe that the true target is up here at last week's high at 16.59, and then from there at 17.62 or 17.33. But let's go into a little bit of an outlook for the euro. If you're paying attention to the euro on the lower time frames, let me just, okay, I got to, apparently, there we go. Alright, what I got to do is actually take a look at the lower time frames. Let me show you what I've been watching on the euro from a okay, so this right here is the 4-hour chart. The 4-hour chart in the euro. And something that we've been watching is this head and shoulders reversal. Alright, so this is the 4-hour time frame going back to May, and how the market has gone sideways here since May, and then we came down and we actually broke down. This is the same kind of level. This is the same kind of setup that we're looking at on this minute time frame that we're looking at on the 5-minute chart. How we came back down to last week's low, and we're using it as support. This all ties in to each other, because we have the possibility for a reverse head and shoulders. You have the left shoulder here, and then the head down here. Actually, I gotta see if I can actually break out my drawing tool. For those of you that are actually able to see it, you can basically, you can see the left shoulder here. You can see the head down here. Look at that. Okay, so the head. Alright, so this thing. Alright, let's just go and copy this. For some reason, why? Let's see if I can. Okay, so anyways, I'll just move this then. Forget it. Okay, so then there's a head right here. And then from there, what I'm looking at is the right shoulder. Originally, I thought it was like right here. Okay, so that's what I thought was the right shoulder. Now, assuming that this was the right shoulder, we had a breakout here. So then the market actually broke out, and now we're actually coming back and we're testing the shoulder again. So this is your neckline breakout. We had the neckline breakout here, rallied up a little bit, and then got slammed, and now we're back at this trading range. So what I'm expecting for this week is that as long as we can hold the lows here at 15.24, which is where we tested the right shoulder, as long as we can hold these levels, then I'm looking for a push back above this breakout level at 16.28. And if we can get back above 16.28, then I'm looking for a measured move. I mean, I'm looking all the way up to 19.50, because the again, when you're taking a look here at you measure the bottom of the head to the neckline. Alright, for those of you that are new or that are not really familiar with patterns. Okay, this is really simple, or this is like one of the most important patterns that you have out there. You take the measurement of the neckline, or the measurement of the head to the neckline, and then you actually extend. You go and you measure from the neckline up, and then you can see here that the move takes us all the way up here to 1950. Okay, so the bottom line is that I expect the market to push us up to 19.5, and that is actually setting up for a pretty decent move in the euro. Let me just straighten out this line.
Financial crisis, appalling 10% deficit to GDP, big recovery, and here's a new rollover with a vector going in that direction to a worser and worser deficit. Francine?
Okay.
What I'm looking at is, of course, the spread between Italian and German 10-year.
Okay, so that's kind of the bottom line, is that I'm looking for a push all the way up here to 19.5. So for the week, as long as we can hold above this low at 1524, you know, that sets up for a move to 16.5 at the very least, going back up to 1659 level. You got this intermediate high right here. We need to break out above this, but I think for the week we can definitely push up here easily. I've seen crazier things, right? I mean, we all know that the market could do some wacky stuff. So this is my range here. I'm looking for, as long as we get, my stop is below 1527 at this point. Hopefully that helps. And again, that was your daily chart. I was looking at, looking at the dollar. Back to the dollar. Here's your other. This right here is the problem, is that in the dollar, you're at the lower end of this trading range. In terms of this channel, and I was thinking that this is going to hold and this is going to rally, but the euro right now is showing a little bit of strength, and the dollar is actually at this trend line here on the 4-hour chart. So for me, if we can hold below this trend line, then that is going to give me more confidence in the euro going higher. Then how do we actually add to it, or how do we get more confidence in that? Well, we look across the board. So the dashboard, you can see here the euro continues to break here, and then the Australian dollar looks like it's still dealing with this level of resistance, but is trading at the highs here of this resistance zone. So at this point, I'm liking what I see for more upside in the euro as opposed to weakness. The market is already starting to tip its hand. It's already starting to tip its hand. So because of that, as well as the, assuming that this market can, assuming that the dollar can actually stay below the major trend line that I'm holding, I'm looking at definitely getting some more upside in the euro. I'm looking for it, pushing up to that 19.5 area possibly. The other component that I'm looking at, I want to see, so right now we already have ideas for the Australian dollar and the euro. At this point, you just got to keep an eye on that. That should, if that continues to hold, if the dollar continues to hold below that trend line, that's going to allow us to look for more upside in the Kiwi, and then more upside in the cable. So we still have a little ways to go. I think that the 130 area in the cable is going to act as a magnet. We still have more upside to go, but the problem here is that right now the market is really quiet. So once again, just pay attention to the just pay attention to the dollar as long as we can stay below that key trend line. Like I was saying a minute ago, if you have any questions, don't hesitate to reach out. Looks like it's getting to be about 10 o'clock in the morning in London. We've had a couple of hours of trading. The market is still relatively quiet, but you can see how the setup right now is more upside in the euro, assuming that we continue to hold this breakout point. Okay, so I'm looking at 119.50 target. Okay, so at the very least, the expectation here, nice little breakout in the euro. Oh, in the euro, the Australian dollar is breaking out as well. So nice little. That's where we should be focusing our attention at the moment. Okay, the Australian dollar is getting through this resistance now. Again, it's above the moving average on the in the 5-minute time frame. So I'm liking what I see. Anything that any kind of a pullback into this 70, you know, we got the 71.13 area is the 50-period moving average on the 5-minute time frame. Also, you have this low as long as you stay above 71.08. I mean, this continues to build. This continues to look relatively, you know, nice. I like what I'm seeing. Okay, so just more upside expected in the euro and the Aussie. Those are the places I'd be concentrating on because the other markets are really quiet. The dollar continues to trade beneath the trading range that we were talking about a minute ago. So nice little confirming move there. In comparison to the others, you know, the markets are relatively quiet. No need to be searching whenever if you're new, if you're struggling, if you're you know, if you're having trouble trying to figure out what's going on in the markets, you know, you just need to focus on what the dollar index is doing. Once the dollar tips its hand or shows you what it's doing, then you know, then you can use that to actually trade in the euro for that matter, because the euro is the exact mirror image, the exact opposite of what happens in the dollar happens in the euro. So at this point, expecting more upside in the euro. Look for any kind of a pullback to you know, if you're on the sideline, you could look for any kind of pullback to this 50-period moving average. I think would be a nice point of entry. Once again, you have on the 4-hour time frame of the dollar index chart. Take a look at the dollar index futures going back to August 15th. There's a trend line there going back to that high. If you draw the trend line from the August 15th high to, I think it was the September 4th high, and connect those and extend it out, we're finding resistance at that trend line. So that's what's moving the market. Everybody always wants to get into these wacky debates on what's moving the market, and quite frankly, I don't really engage the idea that news or anything like that moves the market. I tend to believe that the market moves, and news is created based on that. So nice little breakout here in the euro. Remember, classic charting principles that will follow, and the idea is basically just to allow the market to tip its hand. The market's going to tip its hand, and it's going to prove to us what it wants to do, and then it's our responsibility just to follow. I can't agree more that price is king. I'm definitely in that boat where I would definitely emphasize following price over anything else. The rest of these indicators down here are just kind of they're either confirming or just basically there could be noise, but the most important thing to emphasize is that if you can read a chart, you really don't need anything else. I love that statement, price is king.
If a populist government finds its way into government, there is a risk premium that gets priced into the bond markets, and then in response to that rise in bond yields, the populist parties can either continue ahead with some unwise programs, or they can dial back their promises. And I think in Italy, what we're learning is that there's a bit of a counter-check against those populist instincts and tendencies. As long as they respect the message from the bond market, I think they're fine.
Let me ask a weird question. This is my first day back, and I say this is very respectful. You'll admit at BlackRock. If the British had an election today, what would happen? I mean, would they have a Sweden?
I mean, can I just say I have no idea? I mean, I think
So once again, the market overall, when I take a look at the currency pairs that I'm trading, you can see that they're the combination of 27 different pairs is possible. And the emphasis here is that we're just trading the majors. My focus is primarily on the G8 pairs. I'm looking at the major pairs of the currencies, and really not focusing on anything else, because I think there's plenty to do when you are focusing on the 27 different combinations that we can actually trade. But if you're still new, or if you're just having a difficult time understanding or getting your footing, then you really just want to focus on one or two pairs. And my primary focus, where things really helped me, is I started to focus primarily on the dollar, and then that helped me understand what I was looking at in the euro. So I analyzed the dollar, trade the euro, and everything was it's just a clear image of what I needed to do. And then from there, when you get a little bit more comfortable, you can actually expand out to do your intermarket analysis and taking a look at the currency dashboard. So once again, let me show you of course, the major pairs that we trade as usual. You have the dollar, the Swiss franc, the Canadian, the Japanese yen, the euro, pound, Aussie, New Zealand. Now the idea here is that as the dollar goes in one direction, you can expect the Swiss franc, Canadian, and the Japanese yen to usually move in the same direction as the dollar. And then on the opposite side, you have the Euro, Pound, Aussie, New Zealand basically go in the opposite direction of the dollar. So the idea is to get you need to understand or try to figure out what the dollar is doing first, and then from there you can actually use that to determine what you should be doing in the other pairs. So going back to the dollar, we take a look at the dollar, and this is the dollar on the 5-minute chart. Dollar is creeping below this consolidation zone that we were talking about. Remember, this high right here is the trend line that we were looking at on the 4-hour time frame that goes back to August 15th. And so we're getting a rejection of the trend line. The market is pushing down considerably, going sideways, and now we're actually breaking down below this consolidation. Again, nothing more fancy than that. So now that we have that, I can use that to gain an insight into what I should be expecting in the other markets. You can see that the euro is following suit. The euro is basically going the opposite direction. We have the moving averages actually starting to point to the top right-hand corner of the chart, which to me is a very good indication that the market is going to continue to rally. So any kind of a pullback into this trading range is going to be a nice little buying opportunity in the euro. And this is why I emphasize, like, we don't really need to actually get positioned now. We don't have to be positioned now, because this trend could continue for the rest of the week, or we're just getting started in the trend, in my opinion. And so if you're just sitting there on the sidelines, there will be plenty of opportunities to get positioned. Australian dollar is the other pair. Looks like we broke above this resistance area, and now we're trading right around the highs. But again, it's not like we're collapsing or anything. I think that this is doing what I was thinking a minute ago. I was thinking, we come out, we suck in the long buyers, and then what happens is they start to get short. The institutions will start pushing the price down to suck in the short traders, the people thinking it's going to go down, and as well they'll shake out the weak longs here, bring it down to right down to the moving average, use it as support, and then they'll push it right back up. So no need to get anxious about this market right now. Looks like a buying opportunity right around 71.13, and that's the expectation for the Australian dollar. Back to the major dashboard here. Okay, this is the replica of what you saw a minute ago in terms of the actual dashboard that we were looking at. The grid is what I call it sometimes. But you have the dollar index futures in the top left hand corner. You have the Swiss franc next to it, the Canadian dollar, and the Japanese yen. All of these across the top, to me, are all positively correlated. In other words, they will typically go in the same direction. So I like to have them all lined up one another, because I like to have them lined up next to each other, because if one is going in one direction, then I need confirmation. So if the dollar is going one direction, then I'll look for these guys to go in the same direction. Down across the across the bottom here, you have the euro in the bottom left hand corner. Then you have the pound here, and then the Australian dollar and the New Zealand dollar. Okay, the emphasis here is that the ones across the top are positively correlated, the ones across the bottom are negatively correlated, and therefore, again, the anchor is this one on the left-hand corner, the top left-hand corner. Whatever the direction is that this goes, we'll look for the ones across the top to go the same way, and the ones across the bottom to go the opposite way. Whenever this happens in unison, this is kind of like, shooting fish in a barrel. It makes it so easy for us to know how to navigate. It makes it easier for us to, to hold trades that we can, or to stay in trades that we can hold on to. So the idea here, the bottom line for what we're doing today, at this very point. The reason why we're looking at the euro going higher is because we came down to last week's low a couple of hours ago. I would even say, I think it was probably about 4 hours ago. We came down to last week's low, used it as support, and now we just bounced off of this. So for the rest of the week, if we could stay above 15.24 in the euro, I'm looking for upside potential of 16.5, 17.5, and then 19.5. Those are my levels that I'm actually looking for right now. Same thing happened in the Australian dollar. The Australian dollar came down to last week's low and used it as support. We only broke below last week's low by a couple of ticks, and now the market is actually seeing a nice little short covering rally. This is a beautiful thing in my opinion. The New Zealand dollar is kind of the same thing. We had a gap down, and then the market actually rallied above that, above the previous week's low. So in a sense, this has given us a little bit of an insight into what we can expect for the rest of the week, assuming that this market continues to trade lower in the dollar index futures. The only problem here is that the pound here, the pound is still trading inside of last week's trading session, so I definitely would not be touching the pound. The pound is really just not really where, you know, in terms of what we want to be looking for, folks, is to find a level of support and resistance and then trade off of that level, okay? So again, the pound did not find, it's just sitting here in the trading range. However, if the euro, the Australian dollar, and the New Zealand dollar can actually continue to build strength, then what I'll be looking for is a target in the, I'll look for the euro, or I'll look for the cable. I'll expect cable to go above 130 and break above last week's high. If it can get above last week's high, then all of a sudden we got something to do in the cable. So last week's high is at 130.28, and I think that's a no-brainer. So again, let me go back and show you what I'm taking a look at here. This is the dollar index futures, and the dollar index futures, this is the trend line that I'm watching going back to August 15th, okay? This is your 4-hour time frame. You take a look at the 4-hour time frame, and there is a high there, and then you connect it to the subsequent high from September 4th, and then project that out, and you can see this is right where we're at. We've found resistance right at the trend line, and now we're actually getting kicked to the downside. In the meantime, while that happens, you can see here that let's go and take a quick look at the dollar on the lower time frames here. This is after hitting that trend line. After hitting that trend line, the market has traded down dramatically over the past couple of hours, and then recently over the past hour or so it just traded consolidated sideways, and now we're breaking out of the consolidation zone, and you can see why the euro is starting to spike again. So the euro back up to 1583 now. This, if you were paying attention a minute ago, we were talking about the breakout of this trading range and how that would have been a nice little setup for you. You can see just classic trading principles, classic technical principles here. Is that's all we're really focusing on here. I love classic charting principles that we can use, and then when we actually combine it with multiple time frame analysis, which is what you're looking at there, and also intermarket analysis, you can see how the picture, it all kind of comes together for you to give you a nice little solid foundation, or you know, in terms of giving you a bias that you can rely on. Once again, you don't necessarily need to be focusing on, I guess you would say, setups per se. You know, everybody's so caught up on looking for setups, and the more important aspect is looking for scenarios that will help you determine what a bias should be. So at this point right now, we can see that because the dollar held the downtrend line and it's getting rejected from it, that is providing a bias that the dollar is moving a little bit lower, and then that's helping us establish a bias that the dollar or the euro is moving higher. So for the duration of time here, it looks like we're about 30 minutes away from the 11 o'clock hour in London. And looks like the euro is actually cooperating with what we were looking at from the beginning of the session.
Now, this week, of course, is the 10th anniversary of the collapse of Lehman Brothers, and to mark the occasion, we have a slate of high-profile...
Once again, the problem is that the markets overall are still relatively quiet. Dollar index futures is rather flat, not really doing too much. It's just sitting there, you know, right around the unchanged level, or as some of you familiar with trading will know, we call it unched. So the dollar is unched for the day. And the rest of the markets are really trading within the 1%. The 1% positive or negative performance level. In other words, no market on the dashboard. You can see the left side of my screen here. This is essentially my watch list. None of the pairs are above 1%, and none of the pairs are below negative 1%. Okay, so when that happens, when the markets are relatively quiet, then I have a tendency to step back and, you know, be really cautious about taking trades. I'm very selective, and at this point, that's why I'm looking at the Australian dollar and the euro, because the euro and the Australian dollar found support at last week's low. Okay, so again, starting with the foundation that we had a test of a level of support, and then we actually had a rejection of that level. The market actually found support, and the market traded off it. That gave us something we could actually do. But other than that, you can see that the rest of the markets are, you know, relatively quiet. I mean, you could go and take a look at the Aussie Swissy, the Pound Swissy, the Euro Swissy. They're all up 0.5%. They look kind of exciting, but the markets have already moved. Right now, I'm looking at, you know, following the euro, because I think that this is just getting started. Same thing with the Australian dollar. The Aussie is back on highs. Keep a look at that. Take a look at the Australian dollar.
When did you first realize about the scale of how enormous it was what you were going through?
Okay, so just a minute ago we were looking at the Aussie battling this this level of resistance, and right now it's starting to actually trade. You know, it's still kind of holding that level. I'm going to take a quick look at the New Zealand dollar. Continues to show higher lows and higher highs on the 5-minute time frame. You can see that the last time it came down to the 50-period moving average on the 5-minute time frame, it actually held nicely, and now it's starting to break out of the intermediate high right here at 65.35. So once again, looking at the intermarket analysis, I want to go take a quick look at the pound. Okay, so the pound is actually looking nicely as well. You can see the pound, the New Zealand, the Australian dollar, and the euro are all showing upward bias. Okay, so I'm liking what I see. Let's go take a look at the opposite side of the dashboard. The Canadian dollar is actually looking like it's in a nice little down move. Again, very quiet. Swiss franc is the only one bucking the trend right now. The Swiss franc at this point is actually showing a bullish move. But you know what that means to me is that I think that this is the fake move, is the Swiss franc. Okay, so watch out later on for a smackdown in the Swiss franc. I have a feeling that the Swiss franc is pushing to a high that it's going to be unable to sustain, and then later on during the New York trading session, the Swiss franc may actually be the market that turns around and then gets slapped, for that matter. So as long as the euro continues to establish higher lows and higher highs, we'll continue to look for more upside bias here.
Central banking, if the system locks up, as Loretta talked about in the 10-back look back,
Okay, so once again, relatively quiet markets here, but I am looking for another setup here in the euro. It continues to drift higher. All right, and I think that this could actually continue for the duration, at least for the rest of the London trading session. Let's see, we've got about, say, about an hour or so till doldrums in London.
They can't manage asset prices. They can do those simple things, and in the years during the crisis and since, a lot of countries have fallen into the trap of expecting the central banks too much, and that's not wholly the central bank's fault. It's because
while you're all here, if you like what you hear, I encourage you to actually subscribe to the channel. It'd be very encouraging for me to actually continue to do streams like this. Click the like button. Let me know you're out there. If you have any questions, don't hesitate to reach out. By any means, if you need to, if you have any questions, throw them out in the chat box, and I'll be happy to, to give you a little bit about my insight into whatever it is that you have a question about. Especially if you're new or if you're struggling, don't be shy. Reach out and ask for help. The idea here is that rule number one is that we don't trade in a closet. The idea is that we all want to be trading together. Trading can be lonely, and the important aspect of it is that you need others. If you're new or if you're struggling, you need others to actually help keep you out of trouble. There are others out here that are probably made the mistakes that you're going to be making, and so the aspect of you being in a part of a community will enhance your success a lot quicker than if you're just going about it all alone. I gotta say that the expectation here is to build a community of traders helping other traders. And so what we want to do is to encourage everybody to reach out if they're confused, if you need some help, or to reach out if you have some insights that have helped you come along and make strides in your own development. If you have things to share, by all means, there are people out there that can use your insights for sure. But like I said, trading is very lonely, so that's part of the reason why we're doing this little live cast. For me, it's the middle of the night for all intents and purposes. I'm when the London session gets started, for me it's about 1 o'clock in the morning, 12 o'clock, and midnight is practically when I'm starting to get ready, and then all of a sudden, I look up and quite frankly I'm falling asleep sometime around about this time, 3, 4, 5 o'clock in the morning, and then all of a sudden the move happens, and then I look up and I've just missed the move. So that's part of the reason why I decided to do something like this, because then it helps me kind of stay up. When the market starts to get into these doldrums like it is right now, it's really easy to kind of doze off and just kind of say, forget it, I'm just going to go and do something else. And then that's when the actual move takes place. So my expectation here is to build a community of folks that are trading the London session. That's the biggest thing. Is I think that the currency capital at this point is in London, so you need to take the time to trade the London session if you really want to be if you really want to make trades when the biggest business center for currencies is trading. That's the best time to trade, period. If you're new to trading, that's why you trade the London session, is because this is the time when the most activity is usually taking place, is during the London session. And right now, of course, it's a little quiet. Activity level is really low, but that's okay. I mean, it's the start of the week, and this is just the nature of trading. I can expect that this will not be the case for the whole week, but then again, sometimes we do go many days at a time, and the market is just trading in doldrums. That's just how it is. So discipline is something that we should help each other with. That's for sure. Which is why I encourage, like, you know, trading together. Yeah, that's great. Great comment there about the Brexit. Brexit may be different. After Brexit, you know, things may actually start to pick up again. You know, but that, you know, anything's possible. That's for sure. Anything's possible, and what I like to emphasize is that you know, I have a feeling that a lot of the expectations for Brexit is already baked in the cake, but you know, every time that a decision is made, it basically reinforces the volatility aspect of things. So back to the idea of it being part of the conversation, I think that's really the basis of this whole thing, is just to keep it a part of the conversation. But again, I don't really my focus is to ignore that stuff, so that way I can just stay in tune with what the charts are telling me, and then let the commentary from all the talking heads go in one ear and out the other. That's for sure. So I have a tendency to kind of ignore the commentary, but I do hear it. That's for sure. I hear it, and then I let it go and just kind of focus on the charts. Charts are really all that matter. So back to you know, what we're looking at. We continue to hold above this breakout trading range. So I like the idea here that this market continues to drift sideways, but in the right direction. So we definitely don't want this market to actually kind of go back to the downside. That's for sure. Taking a quick look at the dollar here. Okay, dollar basically continues to trade near the lows of the day, and it looks like we're starting to get, you know, again, a little bit of support here at 95.25, but nothing to change the overall bias that we've established. Okay, once we had the breakdown of this trading range, you can see that actually gave us the recent push that we had in the euro and the Australian dollar. And from here, what I'm looking for is more. I'm looking for this moving average to catch up with the dollar. That's for sure. I mean, this is the 50 on the 5-minute chart. This would be nice for it to actually catch up, and then use that as a ceiling for price. I don't want the dollar to show any kind of a bullish formation here. No patterns. I don't want anything popping up on us here. So again, as long as the dollar continues to show weakness, then I'll be looking for strength in the euro. And then the Australian dollar is the other one that's been on our radar. Okay, so you have the Australian dollar dealing with the breakout point here. However, the Australian dollar continues to trade above the 50. So I like what I'm seeing. I'm just it's just a matter of being patient with the market. Let the market do what it wants to do. And again, you know, overall, looks like Aussie Swiss franc is actually showing some nice strength here. The Swiss pairs are really the strongest of the bunch. So you have the Aussie Swissy at the highs, and then you have the pound Swissy showing some nice a nice trend here. Very nice move here in the pound Swiss. New Zealand Swissy. Right, so go take a look at the New Zealand Swiss. Also doing well. Okay, so New Zealand Swiss. And of course the Swiss franc. Right, so if you're, paying attention, the Swiss franc is really the market to be trading, it looks like. And then on the opposite side, you have the Swiss yen. Swiss yen is the weakest of the pairs, and it continues to actually trade near the lows. But it looks like any of those Swiss pairs are the ones to actually be trading. I think that's going to be temporary, though. I think once the New York session gets started, I think that's going to probably change, though.
Nearly half a military parade in Pyongyang was devoted to the civilian economy, and no long-range missiles were on display.
Oh yeah, the comment being the about the London, yeah, London losing its status as the financial center. Yeah, I mean, I definitely like to say that anything's possible for sure. And given the fact that I think that there's a new paradigm here, obviously with Brexit, but the most important thing is how currency trading, for that matter, is becoming a little bit more widely accepted, or that kind of thing. Whereas in the past, it was kind of a little bit more reserved for like the institutions and stuff like that. Once the retail, we have all kinds of trading all over the world now, in terms of like just all kinds of economies opening up. But I could definitely go along with that. How the London could be losing its status as at least the currency capital, maybe. That's kind of important. But so once again, it's kind of fascinating though that a lot of activity takes place during the European session, which is practically an hour ahead. It's just an hour ahead of London. They usually talk about Frankfurt, right? So most importantly, you got to pay attention to what's happening in Frankfurt and then in London. But I could tell you that in terms of the actual the schedule, for that matter, where I live in the States, it's kind of the end of the trading day, for that matter. So I have to actually get up in the middle of the night to trade, or I do swing trading. So if I'm doing swing trading, then I can actually just take trades in the afternoon when the market actually closes, and then do place my orders then, managing positions and stuff like that. So it's a two-pronged type of approach, where you want to be a swing trader and a day trader ideally, but if you're just getting started, you should definitely start with swing trading first, that's for sure. So we might want to now that we're starting to go, it looks like we're starting to get closer to the lunch hour. This is about the time that I start to check out and start to basically settle down here for the morning. The other thing is I'll probably take a break and get myself something to eat. One thing that I wanted to let everybody know is that I will do a review of the markets and an outlook video that should take a look more at the longer term, my longer term bias. Yeah, it's 10:50 in London right now. Typically what I'll do is I'll take a step back from the desk right around 11 o'clock. I used to wait till about noon, but I have a tendency to believe that right about 11 is when everybody start thinking about lunch in London. So that's kind of when I start to take a step back and then go get myself a break, because usually the focus that I look at is the London session open. So for everybody out there, that's really what if you're wondering what kind of schedule I'm into, that's pretty much is trading right around the London session open. So I would probably check in during the London session open, and then that's pretty much the schedule that I'm looking to hold right now. Once the market is open for a couple of hours, you can kind of sit back and then kind of wait for the New York session open. But my favorite trading time is right there at the London session open. I take the London session breakout, and then I take a step back. Usually I'll go and take a nap, or I'll get something to eat.
In terms of the long-term consequences, and I think that's what the smart money genuinely thinks most of the time. The chart Tom showed, which was an options surface, they're typically distorted because the street likes and investors like to be short volatility, particularly in a low-yield environment, rather than long volatility. If you think about either Brexit or Mr. Trump and the trade war, or what's happening in geopolitics generally, fantastically uncertain. So it'd be reasonably rational to be long volatility, but that's not what people will do because it costs money in the short run. You talk about these things too much on this kind of show.
I mean, I have to say, I think the Bank of England would be pretty focused on the short term when it comes to the risk of no deal. I think that would be a very significant.
I'm sure you talk about more than me.
No, but Paul, I mean, I guess the real concern, right, is that markets move and they can move pretty fast. So you have to also follow there's shorter term money to understand what markets are thinking. Are you saying that there's a problem with how markets view risk?
You need to be
Also, I'm sorry if you watch surveillance today.
Markets typically underprice risk, except when they overshoot in the other direction. What I'm sure the central bank's thinking about, not only here, is.
Alrighty, so just wanted to kind of follow up on what we were talking about a minute ago. The basis of what we're looking at today is to see if the dollar index can actually hold below that trend line that I'm watching that goes back to August 15th or so. If the dollar can stay below that trend line, that's going to set up a nice low move for the rest of the week, in my opinion, because the dollar will trade lower, for that matter, and then that'll give us a basis for the euro and the Australian dollar moving higher, because today they had a nice test of the previous week's low and actually got a pretty decent bounce. So at this point, that's kind of the setup that I'm looking for, is to see if the Australian dollar and the euro can actually trade higher. If that happens, then that's going to actually drag the pound and the New Zealand dollar with it. So kind of peculiar today that we're seeing strength in the Swiss franc. Across the board, you have nice moves in the Swiss franc, so maybe the emphasis should have been to be trading the Swissy pairs, but hey, that's okay, because for the sake of this stream, the idea is to focus on a little bit more of the major pairs, so that way folks can get an understanding about about how to trade the major pairs, and then take it on to using in the other pairs as well. A good thing to take note of. Thank you for reminding me out there that we have some key data coming out this week. We have the ECB announcement, and so that's probably also hindering the activity level. So we may have this kind of quiet type of trading environment until we get the decisions out of Europe. But for the most part, if the dollar index continues to trade below this trend line and continues to work towards the lows, I think I would be pretty excited about this market moving higher in the euro and the Australian dollar. That's for sure. But at the very least, we'll have to just take it as it goes. Right now, overall liquidity in the market is relatively quiet, and therefore the expectation is that it's probably going to be best to wait for the New York session to actually get some sort of a movement from here. So once again, just thanking everybody for taking a look at the stream. The expectation is that we should be back tomorrow. If you got any question, reach out to us, mail at garciaresearch.net. You can take a look at us there as well. And I hope to see you at the next update. We'll talk to you soon.
So they need to probe the economy,